morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you're watching Indian Open. Let's go straight to the headlines. Apple becomes the first listed company ever to surpass the $1 trillion market capitalization number. Kotak Mahindra Bank's promoters bring down their shareholding to less than 20% after a preferential issue of non-convertible shares in keeping with the RBI's mandate. Recovery from the top 12 bad loan accounts may surpass 1.2 lakh crores, says Principal Economic Advisor Sanjeev Sanyal. Arun Jaitley may come back as the Finance Minister around mid-August. And a subdued quarter is expected from Titan after the watch to jewelry maker warned about weak consumer sentiment. Well, if you're an Apple shareholder, you probably had a good day in the US markets. But let's take a look at the trade setup for the day. Remember, Europe didn't have a great day. The European indices, almost all of them closed in the red and closed well over 1% in the red. So FTSE, CAC, DAX, well, CAC maybe not, but DAX, FTSE, and the peripheral European markets also had a slightly painful day of trade yesterday. But courtesy Apple, courtesy some other tech companies, S&P 500 and Nasdaq rose for sure. Apple topped the 1 trillion market capitalization number. There was never a debate about which company could do it. Yes, there will always be a debate about what happens to which company reaches the number 2 trillion mark, and that's the sorry state of affairs that we have a company which has hit the $1 trillion market cap, and we're already talking about what's the next target or what's the next milestone or goal in place. But it was a big day for the stock of Apple because it topped the $1 trillion market cap. It took the US markets up along with it, and maybe as a result of that, the sentiment is not too pessimistic. Apple did reasonably well, the US markets did well, and the rest of the Asian markets seems to be suggesting that we'll have a fairly decent or a mixed start, but maybe with a bit of a green bias in trade. At least the SGX Nifty seems to suggest that we'll start off marginally positive, which is not too bad, because if you just look at what's happened in the recent past, there has been some bit of unwinding on the long positions, both on the Nifty and the Nifty Bank. There has been, the OI has come off. The Nifty was down about 2%, Bank Nifty OI down about 2%, nothing too dramatic. The max OI for the August series still stays at about 11,000 to 11,500. So no big change out there. There might be gyrations here and there, but the broad range remains those 500 points. There might be small pullbacks, and they could get corrected as well if it's a good day. So let's wait and watch. Flows, interesting. The cash market flows, FI sold about 639 crores. Probably the second day in the last 15 wherein the number has been northwards of 500 crores from the FI side. Let's see if this continues or whether this was a flash in the pan in an otherwise trending flow scenario, at least over the last fortnight. And on the derivative side as well, I think it could be yesterday's position, because FIs in derivatives, at least the index options took fair bit of positioning in trade yesterday, but this could well be hedging position. This could well be Nifty Bank induced positions as well. Let's wait and watch. We'll talk about this in greater detail when we talk about derivatives in particular. But no big action and no big reaction expected thereof. We'll start off about 0.25% to 0.5% higher, and then let's see what we do from there. Banks will be interesting to watch out for. 3 days on a trot now. The Nifty Bank has had a corrective move. Let's see if that changes. We'll of course watch out for some of the earnings in the session, to the likes of Titan, etc. But the specific stocks to watch out for at about 9:15 a.m. There are a clutch of mid-sized names. ONGC is one, and we'll talk about it on first word, but nothing too dramatic happened on the numbers, though Somit will come in and give us the granular details. But the key stocks to watch out for, to my mind, at 9:15 a.m. I think Capital First, very interesting set of numbers, and maybe it brings in the IDFC twins into play as well. But NI up 51%, PAT up about 55%. The gross NPA has dipped a little bit on a YY basis as well. This could have an interesting move today. Remember, I think Monday or Tuesday it had a big 5% jump in trade. Let's see if there's some further reaction that we see in Capital First today, and consequently on the IDFC pack as well. Very strong numbers for some of the other names. Torrent Pharma at least was very strong. National Peroxide, it's a small name but did reasonably well for itself. I thought the numbers look very buoyant. And Moil, you could argue that the numbers could have looked slightly mixed, but by and large more optimism than pessimism out there in the quarter as well for Moil. So 3 names that I thought from amongst a clutch of others which stood out as comfortably having delivered strong quarters and might see some reaction thereof too. Reliance Naval, it's a tiny tune, not too many people trade it anymore, but ONGC has cancelled a contract for 5 of the 12 offshore support vessels. Maybe it has some further impact on the sentiment on Reliance Naval. Watch out for that. And Emphasis to consider buyback of shares on August 7th. Let's wait and watch if Emphasis has some positive reaction as a result of this as well. So multiple stocks, multiple news, results galore out there to talk about, and we'll do all of that today during the show. The first 1 hour will be all about these key movers and a lot of mid caps and small caps, which is quite interesting to note in the session today. However, what's lined up on first word? Well, ONGC's profits may have failed to meet expectations, but that's not to say that the oil producer hasn't made the most of higher crude prices in the first quarter. Sumit Sarkar joins in to tell us the granular details about the quarter. Well, then Manpasand Beverages may have finally come out with its results, and costs have clearly taken a toll on the company. Yatin comes in to tell us what else has turned sour for the fruit juice maker and what could the outlook be like for Manpasand Beverages. We get a slice from ERA's chat with the Principal Economic Advisor at the Finance Ministry, Sanjeev Sanyal, on the IBC process and LIC's latest buy. And it's now the apple of everyone's eye. The tech giant is a $1 trillion company. We give you some fun facts around it. However, if there is one company that's not complaining about rising fuel prices, it has to be ONGC. The country's largest oil producer posted its highest net realizations in at least 11 years. The company also managed to cut down on a sizable chunk of its debt in the quarter gone by. Sumit Sarkar is here to take us through the numbers and the details, as I said. Now, Sumit, one area where the company maybe fell short of expectations has to be the bottom line. But otherwise, what did you make of the numbers?
Yes, on the net profit front, they did miss the analyst estimate, but that was because of lower other income, higher foreign exchange losses, and because of a higher tax rate. But operationally, the numbers were in line with analyst estimates, and more importantly, it was the management commentary on debt and subsidy burden, which was positive in this quarter. So if you see, the company's net profit increased by around 4% to close to 6,144 crore rupees. Now, this number is below analyst estimates because of an 83% drop in other income, nearly 5 times higher foreign exchange losses, and because of a higher 36% tax rate in the first quarter of financial year 2019. Now, other income was lower because in last quarter the company had received dividend from HPCL and IOCL, while foreign exchange losses was account of the rupee depreciation that we saw in the first quarter of financial year 2019. Now, if you see the other headline numbers, they were pretty much in line with the analyst estimates. And revenue came in at close to 27,200 crore rupees, benefiting from high crude oil and gas prices, while the EBITDA rose to close to 14,700 crore rupees, while the margins came in at 54.1%. Now, net realization, now that came in at $74.2 per barrel, the highest number reported by the company in at least 11 years because of no subsidy burden in this quarter. On the operational side, if you see, the crude production numbers remained flat, while the gas production numbers were higher in this quarter. And on the sales side, the crude production sales number were down by 2%, while the gas production sales number were higher by 2% compared to last quarter. Lastly, in the conference call, if you see, the management addressed some of the investor concerns related to subsidy and on the debt burden. Now, the management said that the company has been able to bring down their debt to close to 16,670 crore rupees, which is a reduction of more than 8,000 crore rupees in just 4 months. Now, management also said that there is no pressure on the company when it comes to reducing their debt, and they won't be monetizing any of their stake in the listed entities. Along with this, on subsidy burden, the company said that if crude stays in the current range, then they are sure that there won't be any subsidy burden on the company, at least in the financial year 2019. And if you see, brokerages have also remained upbeat on the company because the numbers were in line with the analyst estimates. And the target price on an average for ONGC is 36% higher compared to the current market price, and that is because of the good quarter and brokerages being bullish on the company, and most of them also believe that there won't be any subsidy burden, and that is the reason why we are seeing such a bullish target price when it comes to ONGC.
Thanks a lot for that, Sumit. So watch out for ONGC in the session today. Bottom line missed marks, but otherwise, Sumit gave you granular details of what the company did in the quarter gone by. I don't personally think that will be a massive reaction, but let's wait and watch. Banks, the next piece on first word. Banks could recover more than 1 lakh crores from the top 12 bad loan accounts, says Sanjeev Sanyal. He's the Principal Economic Advisor to the Government of India. That should pad up state-owned banks' regulatory capital, but Sanyal says the government is prepared to provide growth capital as and when required. He also goes on to say that LIC's acquisition of IDBI Bank would be a win-win deal. Listen in.
This is a commercial deal. I mean, LIC needed to have a banking outlet. It got one at a good price. LIC has a long record of buying public sector assets, which it then has been able to actually make a good profits from. And in any case, this is a commercial decision they have made. If they should feel that at some future date they want to change their opinion, their board can take that decision. So this was a decision of both the LIC board and the IDBI board. It works both ways. One of them provides capital, the other provides a branch network. It works well.
But you don't see interconnectedness risks emerge from LIC. I mean, it is already by far in the too large to fail category. It has holdings in a number of public sector, some private sector banks. It has its own debt portfolio. Aren't the interconnectedness risks quite substantial?
No, it is largest financial sector institution by some margin. So interconnectedness is because it's so large, it's interconnected to everything, including the government, by the way. It is also the largest buyer of government bonds. So, so in that sense, given its size, it's connected to the whole system. Now the question is, did it make a decision that is commercially non-viable? My contention is that it is not obvious, as many commentators make it to be, that this is sort of a fobbing off of a bad asset to LIC. That is not at all the case. There is a commercial reason for doing it. They considered it and they took the plunge. It's their board has decided it, and you know, our view is that it's very likely that LIC will actually find this an extremely profitable investment in the long run.
Okay. The capital position, now that IDBI is out, I guess that saves a little bit of the capital for other banks, Sanjeev. But as things stand, you're comfortable with meeting capital needs under the 2.11 lakh crore program?
See, we haven't yet given out the full 2.11. So, you know, there's some more money that can be handed out on that original estimate. Remember, meanwhile, that many of these NPAs have already been written down completely and provided for. So now what is happening is that we are beginning to see fairly substantial chunks coming back from the liquidation, sale, etc. of these NPAs. The first 12 cases alone, you've seen several of them getting done, some very chunky ones, and some more chunky ones coming through probably quite soon. In addition to which, you've also seen because of the change in the sort of credit culture, fairly large amounts of money also coming back, with promoters coming back and repaying the banks. I mean, estimates are floating around, but they're in the 80 to 90,000 crore range, where other than these top companies, others have also come back and repaid. So, you know, whether it's the top 12 companies, where I think more than 1 lakh crores of just from these 12 companies are likely to be recovered, maybe somewhere in the 1.2 lakh, 1.3 lakh, somewhere in that range. Plus, already you've got this 80, 90 lakhs coming through, somewhere in that range. And then there's a pipeline of other companies. So you're going to get a very substantial amounts of recoveries coming through, which are going to directly go back to the banks. And they have recovered. I mean, they've already provided for it. So, you know, this is pretty good.
Okay, Sanjeev, a slightly different issue.
But important thing to remember is that we do want the banks to. We also want the banks to grow again. So it's one thing to simply provide regulatory capital to them. Ultimately, because the economy is growing, we just discussed a little earlier about the need for a private investment coming back because output gap, etc., is closing. We do recognize that the industrial sector, particularly MSMEs, need bank capital. So we do need to get these banks up and running and expanding again. So I don't think, so we do recognize that it's not just a matter of providing them with the regulatory capital, they need growth capital as well. So should they need it, provisions and effort will be made to provide it. But right now, I think we are still within that original 2.11 lakh crore space, so we can go further on that. There's money coming back from recovery. So for the time being, we are comfortable with it. But if necessary, we will make other arrangements as well.
Well, and interesting, a win-win for both the government, or both LIC and IDBI, and the PSU banking piece as well. In fact, a story around this is there on the website, bloombergwin.com, so do log in and read that. In fact, if you want to hear the whole interview too, that will be on the website as well. The last piece on First Word today is about the largest company in the world. It's currently the apple of everyone's eyes. The tech giant became the first US-based company to see market capitalization cross the magical 13-figure mark on Thursday. The iPhone and MacBook maker has also had its scares along the way, from being on the brink of bankruptcy in 2009 to its new highs as well. I've just gotten a few data points and then Alex Johnson with some fun facts as well. Now, of course, it becomes the first listed company to reach that 1 trillion market cap. But if you look at the journey from December 1980, when it hit the first 1 billion mark, to the 1 trillion mark, the numbers are astounding. And obviously, there is a method to this madness. With size, you scale the additional 100 billion much quicker than what you did in the previous past. But if you just look at the time that it's taken for Apple to move on to the last 200 billion marks, it's been quite astounding. May 2017 is when it hit the 800 billion mark. November 2017, it hit the 900 billion mark. So that was pretty quick. And then it took about, well, 9 or 10 odd months from November 2017 to August 2018, which is yesterday, to hit, to get the additional 100 billion and clock in the 1 trillion mark as well. So it's been an astounding history. A large portion of the gains, very, very pronounced over the last 4 or 5 years. In fact, Feb 2012 is when it hit the 500 billion mark, and then in the next 6 years, another 500 billion. That's pretty interesting. Now, it's the third. Remember, it's no longer the second largest smartphone market share company. It's the third largest because Huawei has pipped Apple to the post, so to say, for the second place at least, if not the pole position. But the recent past, the immediate recent past has been fairly positive. It's had its best ever quarter in the month of June. The June quarter, it's the best June quarter ever. Not the best ever quarter, but the best June quarter for Apple ever. It delivered the 4th consecutive quarter of double-digit revenue growth, which is pretty interesting as well for that size to do that. It's guided to revenues between 60 billion to 62 billion for the 4th quarter. To put this into perspective, they did about 53 billion in the quarter gone by. So that's the other bit. And to most people who are bulls on Apple, they say that why is it that the stock has to trade at a 17 to 18 PE? It's no longer just a tech company, it's more a consumer company, and therefore give it a higher PE multiple. Now, you'll always have bulls who are saying that let's do this. You always have bears who believe that, oh no, this is just way too much. But you never know. These days, you don't know what is too much, to be honest, because what is considered too much only gets eclipsed very, very quickly by some of the other companies as well. So let's wait and watch. Some stats for Apple, some stats against. But if the fundamental performance is to be believed, the last 4 quarters, the quarter gone by, the guidance that the company is given, all of those seem to be very, very positive. I'm not an expert, to be honest, so I won't dwell too much on this. Frankly, don't even track Apple that closely. Just looked up what analysts had to say over the last, the last 2 or 3 hours yesterday. Just looked up what different people across the world had to say, and just a small compilation here. But what Alex is about to do is much more interesting, because he joins in now with a comparison which shows just how big the company has become. Alex.
But, Neeraj, just a small point to add to what you were saying. I think one of the factors that a lot of people have alluded to is the fact that it's managed to increase its pricing for the products and still, maintain, despite a slight lose in market share, it's managed to retain its pricing. But, in the world that we live in, we tend to sort of let things slip a little. So when you say $1 trillion mark, sometimes you don't understand the gravity of it, okay? And what helps here is comparisons, very clearly. So what I've done, or what rather the team has done, is to just draw up a comparison to help you understand really how big Apple has become from the 40 years that it's been in existence. It started, by the way, in a garage, okay? So as of now, Apple, its market capitalization is larger than the GDP of all the countries that you see marked on your map. In case you need me to go through the risk, so you have Netherlands, you have Turkey, Saudi Arabia, you have Switzerland, Argentina, Sweden, the UAE, and also Israel. The individual GDPs of all of these countries, Apple's market share is, or rather Apple's market capitalization is now larger than the individual GDPs of all of these countries. And if that wasn't enough, And you can draw several comparisons like this. There is a clutch of South American countries, 9 South American countries. I'm just going to read them off a list. Chile, Peru, Ecuador, Venezuela, Uruguay, Bolivia, Paraguay, Guyana, and also a country called Suriname, which if you haven't heard of it, you should check it out on the map. But all of them together, their GDP is currently just about less than what Apple's market cap is at the moment, Neeraj.
Wow, so that's what, Alex, more than 50% of the landmass of South America put together is less valuable than the market capitalization of
one company. So that just puts things in perspective, doesn't it?
Wow, that's very, very interesting. Thanks, Alex. Thanks for putting this into perspective. So some large individual countries and their individual GDPs, not as large as Apple, yes, but a large portion of the South American landmass put together, less valuable than the market capitalization of Apple. That's the power of that 1 trillion mark. In case you thought it was just a tweet, it is a lot more than a tweet. However, that's all that we have on First Word today. I mean, if we were in the US, we could have gone on and on with this, but hey, we are in India and we will talk about the Indian stocks because that's what all of you tune in for. So lots more lined up on Indian Open. We'll talk, as we've done for the last 2 or 3 sessions, talk to a clutch of mid-sized companies about the cost pressures, about the quarter gone by, about the outlook ahead. So Century Ply joins in to talk about the price cuts that some of these companies have had to face. Sanjay Agarwal joins in to speak about that. We decode the June quarter earnings with Vaidyanathan of Capital First, and Abhishek Jain of PPAP Automotive joins in to talk about how their quarter was, which was indeed seemingly a very good quarter. All of this is a bit later on in the show. After this break, though, we take a full tilt towards the day's trade.
RP Sanjeev Goenka Group, growing legacies.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're still watching Indian Open with us on Bloomberg. Quinn, let's quickly do a check of the Asian market indices. It looks like a mixed start for the Asian screen. Nikkei is, however, trading with some bit of gains, up almost 30 points in trade, but there is some weakness which is being seen for Shanghai as well as Hang Seng. Both the indices are seeing cuts of between 3/10 and 0.7%. But what about SGX Nifty? Last 2 to 3 sessions, we've seen some bit of unwinding of positions which have come by. SGX Nifty this morning is once again suggesting a start above the mark of 11,300. Having said that, let's check what sort of cues we are getting from the futures and options market, considering yesterday was a weekly options expiry for Bank Nifty. Agam's here to tell us more about that. Hi Agam, good morning. Long unwinding scene for both Nifty as well as Bank Nifty futures.
Absolutely, Navneet, and for the Nifty banking futures for the third straight day in a row. But let's pull up the futures of the Nifty first and see, as Navneet mentioned, we are looking at cuts of around 1%. Let's see if we see a little bit of reversal here coming through. But as we were talking about, the Nifty banking index sees the third straight day of unwinding in its futures. We're seeing another 2.5% decline in open interest. Moving on, taking a look at the other variables in terms of changes in open interest, considering we saw the Nifty move downwards, we saw more writing around the 11,500 call, and this is where you also have maximum open interest, and similarly unwinding in the 11,000 put, again the one with the maximum open interest. And with that, the Nifty put call ratio has also moved lower to around the mark of 1.64. In terms of stocks, we're watching out for something like an Adani Power, which has moved into the F&O ban very early in the series. So watch out for that. And among many other stocks that we're watching out for, Divi's Labs moved up higher, and we've seen fresh longs come through in that stock. Jet Airways is the other surprising one, though we do have a lot of news flow coming this morning, which may just put Jet Airways under pressure at this point in time. So we are likely to see some reversal coming through, despite the fact that we did see longs come in. Let's wait and watch on this one. And finally, in terms of some of the weaker ones, we saw some profit taking in Marico in the cash markets, and well, fresh shorts building up in Marico in the futures market, even as the stock comes off by around 4.5% with an increase of around 14% in open interest. So a whole host of stocks to watch out for, Navneet, and we'll be watching out for how well the index also pans out.
Yeah, well, for sure. Agam, thanks for putting this into perspective. The last 3 days, Navneet, almost everybody who's been on the show, on the Countdown show, has been speaking about how the Bank Nifty looks under a slight bit of pressure. And the earlier calls of accumulating the Nifty Bank at those key levels, 300, 400 points, is now making way to let's wait and watch and let the slide subside. We might well have a start which is largely in the green today, but it'll be interesting to see how the Nifty Bank trades, because it's been 3 weak days, and if I'm not wrong, some bit of unwinding as well of the long positions that we've seen.
That's right, Neeraj. In fact, especially Agam also highlighted for Bank Nifty futures, we've seen that unwinding coming about, and the weakness actually kicked in post a monetary policy. That's when Bank Nifty started underperforming a Nifty as well. So let's see if there is any sort of recovery. But let's not forget, both the indices have been trading around their all-time high level. So some sort of consolidation, some sort of unwinding of positions was needed from the top. But if you were to watch out a level in terms of support for Nifty, do watch out for the 20-day moving average, at least in today's session, which is somewhere about 11,050. But that's almost 200 points down from the current market price. So not to worry about that. And in fact, Bank Nifty also has been trading comfortably above its 20-day moving average. So far, Neeraj, I think things are looking fine. But any more correction, I would say, if you see Nifty, Bank Nifty, that may not augur well for the broader markets. I just want to take one point forward with which Agam highlighted about Jet Airways. Both the stocks, Indigo as well as Jet Airways, went up in yesterday's trade. But there's one report this morning which has come in Economic Times paper, where the company has told its employees they can't fly beyond 60 days. So watch out for this counter. The management has been meeting the employees. In fact, they've asked the employees to take a cut of nearly 25%. If they don't do that, they may not be able to fly beyond 60 days. So once again, I think the aviation pack will be in focus. Yesterday, just in the last 1 hour, 1.5 hours, we did see some bit of bounce back for Interglobe as well as Jet Airways.
Yeah, it was a sharp bounce back for Jet Airways yesterday, but let's wait and watch what the impact of this is. It's not a very pleasant scenario to be in from a perspective of somebody who's looking at the stock from outside. To see news flow like this, even if the stock is trading very close to the 52-week lows, it doesn't inspire a lot of confidence. Coupled with the fact that aviation space has shown that it has not grown to a point wherein it will be able to withstand all of the all of the pressures, including the cost pressures as well. I think all through the last calendar, when the going was good, everybody was saying aviation has finally turned the corner. You're seeing that one industry with a 20% growth month after month. How is it that you can go wrong? Well, now we know how people have gone wrong. Not to blame anybody, but yes,
crude prices.
Yes, crude prices and a meaningful impact, and not just on jet and spice jet.
You know, that makes it very difficult to take a bet on any commodity stock. But we've seen metals doing very well in the last 2 years, and the rallies actually lasted, so to say. Now is the time when the correction has kicked in. But for aviation, we've not seen any significant, meaningful rally, which has come in despite of when even the prices were lower. I think besides Indigo, which has been managing its cost really well, now it's come under pressure because of the high crude prices.
Yeah, I mean, to be fair, I mean, SpiceJet, from the time Ajay Singh acquired the airline, 18 or 20 rupees to about 150 was a fairly decent move, but I think all of those stocks are under pressure. So, yeah, some clear pressure points out here on some of these companies. However, you know, before we move any further and get in our guests, is a battery of news flow that we need to digest. So let's get in our research team in our research huddle slightly earlier than usual, but just so much of news flow that we need to talk about that. So Shraddha, Nikki, Saloni, as well as Agam comes in back to talk about all the key stocks in news. Maybe talk about Titan. The results come out a bit later on and might not be the best of quarters. So lots to talk about. Thanks so much, all of you, for joining in. Shraddha, let me start off with you.
So I'm going to talk about Indiabulls Housing Finance. A very strong set of numbers across parameters. That profit grew by 30% to come in at 1,500 crores. Provisions for the quarter were lower at 65 crores versus 198 crores. And based on a conservative accounting policy, the company has said that they are going to retain their 1,050 crores as ad hoc provisions, which is a good thing. Even if you look at most of the parameters, disbursement growth came in at 48%. Loan growth came in at 33%, so about 30% growth in line with the trends that we've seen in the prior quarter. Asset quality numbers continue to remain steady with the gross NPA at just 0.78%, and on the other hand, spreads in the quarter actually increased sequentially from 3.11% to 3.23%. So very strong performance overall in the company's numbers, and you also have marginal price, target price hikes coming in from Nomura and Credit Suisse. So definitely a good day for Indiabulls Housing Finance.
Yeah, it certainly seems to be living up to the kind of performance that the stock is showing as well.
Yes, growth numbers continue to remain robust along with return ratios. No concerns really, despite their exposure to corporate mortgages as well. So analysts do believe that the high valuations are sustainable.
Well, interesting, and we'll hear from the management at about 10:15 today, so that'll be interesting to watch out for. Thanks a lot for that, Shraddha. Nikki, what do you have for us?
Strong numbers. Torrent Pharmaceutical, good set of numbers reported by the company, but then the key lies with the management commentary. Revenue up 37%, EBITDA 60% up, higher than the estimates, more than 12% higher than the estimates. The strong growth of Indian business which is led by organic growth and Unichem performance mainly has led to an upbeat set of numbers for the company, but then the management commentary suggests that the worst of price erosion is over for the portfolio of the company, and it expects higher US sales sequentially, so that's why we expect the positive reaction to come in. Capital first, a good set of numbers reported YOY basis. Net interest income 50% uptick, net profit more than 50% uptick. Provisions for the company have come down by more than 8%. We've seen some asset quality improvement. Gross NPA comes in at 1.57, lower than 1.72 seen in the corresponding quarter of the previous year. MOIL, not exactly, it's like a decent set of numbers. Top line growth, we've seen 8% decline. Net profits had shot up by 16%. EBITDA is up by 13%, but that's mainly on account of the cost-saving techniques. Typically, the raw material costs that the company has reported lower, which has led to the saving grace for the company. Mining revenues, however, a cause of concern. They form 93% of your overall revenues, but then they've seen a flattish kind of growth there.
Okay, we'll watch out for that. And that's not all, frankly. There's a bunch of stocks which are in news today, all of which have the news flow out there has the potential to move these stocks. Saloni is here with, well, a very long list, Saloni. Let's break it up. What are the key news makers today?
So first up on my list is Jet Airways. Now, according to an ET report, Jet Airways has informed its employees that airline will not function beyond 60 days unless they take some cost-cutting measures, which includes a pay cut of 25%. Now, remember, this was reported by ET yesterday. That apart, according to a Mint report, Jet Airways promoter Naresh Goyal is looking to offload some promoter stake on the back of this news flow on in the airline, so this is likely to react negatively in trade today. Moving on to Imami. So after losing race for Fortis, Manipal Hospital is now in talks to buy Imami Group's Advanced Medical Research Institute in Kolkata, and Imami Group is looking to seek valuation in the tune of 800 to 1,000 crore for this deal. That apart, Kotak Mahindra Bank has reduced promoter holding to 19.7% by issuing non-convertible preference shares to meet RBI mandate to have promoter holding sub 20%. You also have PVR. Good news coming in for this company as they have renewed their non-exclusive agreement with Book My Show and Paytm, and this is for the term of 3 years. And on this, PVR is to receive 410 crores on the back of minimum guarantee and deposit funds. Dheeraj.
Okay, so those are three. I mean, I'm sure there are a clutch of others. Something related to auto in a big way, right? Tata Motors, Bharat Forge, and the others.
So Tata Motors is in my list again. So it will be in focus, where it has reported its JLR US sales number, which came in down about 11%, largely led by a strong drop of 41% in Jaguar sales. Emphasis India is another company that will be in focus today. The company has announced that it will announce its buyback program on 7th August. So watch out for this one. And lastly, Bharat Forge and RK Forging will remain in focus on the back of Class 8 truck sales order in the month of July. Now it has jumped almost 3 times on a year-on-year basis, which is its highest order since March 2006. So good news coming in for these two counters as well.
Well, let's wait and watch if they react or no. Let's wait and watch if Tata Motors reacts or no, because maybe it's done with a fair bit of reactions already. Thanks a lot for that, Saloni. And Agam, what's expected from Titan?
Well, this time around, Neeraj, I suspect that a lot of analysts will find it challenging to put out estimates for Titan, considering the mid-quarter update that we had from Titan. They did indicate a weakness in this specific quarter, and if you leave out Akshay Tritiya, they could see a decline when it comes to jewelry sales. So I'm going to start off with your estimates. We are expecting 7% increase when it comes to top line. Margins are still expected to expand to around 10.5% against 9.9%. Profits likely to see growth of around 11.5%. Among the factors that the management has spoken about in Titan, one is that the demand for jewelry has been weak, and it's not only for adornment but also for bullion. Secondly, and studded jewelry, which gains traction in the wedding season, and do remember that May does have a very small wedding season, which provides growth and aids the sales for Titan. This time around was subdued. On the other hand, the watches segment is expected to pick up on the back of new products and smartwatches specifically, which is why they're factoring in about 5 to 6% growth there. But on the whole, it's going to be a very quiet quarter, considering 80% of their revenues come from the jewelry segment, and we are not expecting too much there.
Okay. Yeah, if I can just slip in a quick one. What about Marico? What has the street now said, now that they're trying to digest the numbers, because they didn't quite live up to the estimates or expectations?
Right. Neeraj, we have to understand that Marico really didn't move up along with the rest of the FMCG companies, and at this point in time, everyone is, or I would say majority of the analysts are of the opinion that while the numbers were in line with street expectations, they're going to wait for a few more quarters before they start seeing an established trend of recovery. But for now, well, the numbers are out and largely in line, and a little bit of profit taking seen yesterday.
Well, let's wait and watch what happens there. Thanks a lot for that, Agam. Well, a bunch of names to watch out for. Let's talk about all of those and more with Vinit Bolinjkar. There is a particular stock that I want to talk about with him as well. But Vinit, good morning. Thanks so much for joining in. Let me start off with Jet Airways. Now, I know aviation is a beaten down horse. I mean, how much can you beat a dead horse down from where it is right now? But the news flow is disconcerting to tell employees that unless you take a pay cut, you can't fly beyond 60 days. And the fact that the pay cut is not a small one, 25%, which shows the kind of stress that the company might be in as well. Does all of this lead you to believe that there could be, from an investment perspective, substantial downsides to this one and the aviation pack at large, or is the damage largely done?
No, I believe that there could be some more damage because oil prices are expected to remain firm. Okay, what we are seeing is purely a sort of pullback on some inventory news in the US. But with the winter season coming along, I think that crude price still has some more legs to go. In addition to this, what we are going to see is soft dollar, which people are talking about. People are talking of a soft dollar, but all nuances indicate that the dollar will only harden. So with China also wanting to devalue its currency and India also having to resort to competitive devaluation, I think the pricing of crude will be impacted negatively on two counts. One is the rise in price and there's a fall in currency. So given these kind of trends, I think the airline stock pack is well left aside. And notably, you should exit Jet Airways and look for bargain prices, Spice and Indigo when the tide turns. And the simple way to play these stocks is to just watch the crude price. When the crude price is abating, you get into it. And when the crude price is rising, you get out of it. Do not wait for the tide to turn because the stocks fall very sharply. So you have to play it on the edge and not off the ledge.
Well, a lot hinges on how the crude prices pan out going ahead, considering nearly 35 to 40% of the operating cost for these aviation companies depends on that one. Hi, Vinit. Good morning to you. A lot of result reactions to watch out in today's session. First up, your reaction on ONGC. The numbers were largely in line besides bottom line, which was hit due to higher tax rate and finance cost. But net-net, the realizations did surprise the street. What's the call on the stock?
Yeah, we are quite positive. Okay, although the volumes declined about 3.5%, but the pricing has finally made up, and I think pricing is going to firm up even further. So we continue to remain positive on this stock, and we expect that you will see higher prices. But it's purely a trading play, not a complete investment kind of idea.
Okay, so just a trading play. Probably we can see some trading bounce coming in for ONGC. But the CLSA note this morning had an interesting takeaway on ONGC, where they mentioned that this is a E&P company which is now the cheapest if you compare it to its global peers as well. And it's for the longest time being underperforming its global peers as well. But Vinit, besides ONGC, you also had Indiabulls Housing Finance, which came out with the numbers. Decent set of numbers. Any thoughts on this one?
Yeah, at 2.9 times book and for FY21, with about 18 months ahead out, and with some spectacular growth in EM, and they have got one of the best metrics among the housing finance stocks. So given these kind of things, it becomes a very compelling buy, and we remain buyers of this stock.
Okay, that's interesting. Vinit, you track this space very closely, and hence my question to you. When one of the cement companies that has come out overnight as well, not the best of numbers, while the larger ones managed to buck the trend and in fact come out with a big positive surprise. I use the term big consciously. Somehow the mid-cap companies haven't been able to quite live up to that billing. What have you made of earnings thus far? Any of the cement companies, the numbers of which have stood out for you? And if you track JK Lakshmi, then that one, the numbers haven't been that great.
No, so I think JK Lakshmi is feeling the brunt of market share gains being executed by Ultratech in the north and west. So they have been cautious on going aggressive on volumes because they do not want to take losses. So until the market share of Ultratech doesn't stabilize in those regions, I don't think that JK Lakshmi will go all out to ramp up volume growth. And so we expect these numbers to remain soft. But if you believe that the cement story will play out over the next 2 to 3 years, then these soft prices are ones to nibble into the stock and sip into it as the stock comes down.
Interesting. Okay, as we said, we'll also watch out for the truck orders, the Class 8 truck orders in July, which have jumped significantly and might be a small positive for 3 companies, but 2 in particular, which is Bharat Forge as well as Ramkrishna Forging. So do watch out for those as well. And watch out for Tata Motors. The numbers have looked slightly wobbly, at least the Jaguar numbers have looked slightly wobbly. Let's wait and watch what happens thereof. Actually, Vinit, one quick question as well on these companies, Bharat Forge, Ramkrishna Forgings, etc. The numbers though, Ramkrishna Forgings seem to be okay, but the stocks really haven't set the stage on fire. The North American data seems to be very, very positive. Is there merit in looking at these names?
There is definitely merit, but you know what? We are going to see a short-term kind of blip in the North American sales. That is purely because, you know, if vehicle prices get 20% expensive, already the stocks in the US are under pressure. So they are going to suffer from, you know, volume degrowth due to price increases, very sharp increases one time. So there would be some time before things would adjust. And with the US and China inflicting a second round of sanctions, I don't think this trade wars are going away that soon. So, barring for the US, I think the Indian operations are doing very strong. And we should be waiting for lower levels on these stocks to, you know, venture into them.
Okay, let's see how the stocks react to the Class 8 truck orders which were there in the month of July. Clearly, Bharat Forge posting stellar set of numbers there. But let's also get you some technical views going in for the markets today. When they open, we're joined by Shrikant Chouhan of Kotak Securities, who's right here with us in the studio. And also joining us is Dharmesh of ICICI Securities. Good morning to both of you, gentlemen. Shrikant, let me come to you first. You know, last 3 days, there's been some profit booking from the top, and that's fine because I think there were so many days when every day we were, you know, hitting fresh highs. So how do you view this correction? Is it a consolidation phase? Is it an opportunity to now buy Nifty, Bank Nifty at lower levels, or still you will wait it out for some more correction?
Good morning. I think, see, the way Navneet, market recovered from the levels of almost 10,660, 650 to almost 11,000, close to 300, 400 levels. We feel that there was over retracement because hardly any people failed to able to join this particular up move, and it was mainly because of few stocks which have left the market to all-time highs levels. So now there is a correction, there is a retracement, and market will try to retrace to its important previous resistance level, which was around 11,170, all-time highest level, and there the market has also left gap. So we feel that the max, if there is any correction, then market will try to fill that particular gap and it will recover back. So if there is any correction, we are expecting it will be an opportunity for short term as well as positional traders to create long positions. Here we can keep a stop loss at 11,150, and on the high side we can expect 11,350.
Okay, thanks so much. Shrikant, just hang on because Kotak Mahindra Bank has reduced its promoter stake to below 20% after completing the issue of a non-convertible preference shares. Let's get some more details on it, some opinion from Mr. Jain Bhatt. He's President and Group CF of Kotak Mahindra Bank, joins us right now on the phone line. Mr. Bhatt, good having you. Thanks so much for joining in. The new preferential issue that has also been spoken about, give us some details. Does this lead at any point of time to some further equity dilution as well, Mr. Bhatt?
No, just to explain, these are non-convertible. So it is non-convertible, perpetual, non-cumulative preference shares. So they are perpetual in nature, non-convertible, non-cumulative, an instrument which is reasonably well set in the Basel III guidelines. There are RBI circulars on that, and to that extent, this is not something which is going to be convertible. It is though part of the Tier 1 capital, which for banks, and to that extent, it will be part of capital.
But just a clarification, you can correct me if I'm wrong. I don't think they will carry any sort of voting rights. So will that have an issue with regard to the approval that you have to get from RBI?
Voting rights in a bank, in any case, are something which is capped by the requirement of the Banking Regulation Act. The BR Act gives powers to the RBI to set a limit, which currently is at 15%. So to that extent, any shareholder who has shares which is in excess of that ceiling is in any case capped at 15% for his voting rights.
So this will pass through according to you, and this may not have any issue with regard to the approval that you have to get from Reserve Bank of India. If you've already got the approvals, are they in place?
This is something which we have intimated to the RBI last night after the issuance closed. So that's something which we did the issuance, and the allotment happened late evening yesterday, and we have intimated to the RBI just after that.
Okay, I'm guessing this is too premature to ask Mr. Bhatt, but I believe you're moving timeline to timeline. This is as per what the directive was, and I believe the next directive is only for March 2020.
That's right.
Okay. Fair call, Mr. Bhatt. Just wanted that small clarification. Thank you so much for taking the time out and being with us today.
My pleasure. Thank you.
That's the President and Group CFO of Kotak Mahindra Bank talking about this thing. Perpetual perpetual non-convertible, non-cumulative preference shares, so no big dilution as well, and meets the directive. They've done it last night, informed to the RBI, par for the course.
Yeah, I think they've done it before the deadline of December 2018, and now I think it's in 2020. They need to reduce it further by 5%.
March 2020, I believe.
March 2020. Okay, that's about Kotak Mahindra Bank. The stock, remember, in the last few sessions have been under pressure. Yesterday also it was down 2.5%. Let's see how this one reacts to equity dilution, which the street obviously knew about it. It was all about the timings. But let me just go across to Dharmesh and first take his views on the markets as well. Dharmesh, your view on Nifty, Bank Nifty for the day?
Yeah, good morning. I think so. Definitely, if you look at the market, as market has already been seen a sharp rally from 10,600 to 11,400 without any major corrections. And if you look in the market since 2013, none of the moves there is a rhythm of making 10, not more than 10 higher high, higher lows in the market. So if you look current trend, I think so we have already 9 consecutive higher high, higher low, and then yesterday we have seen some bit of a profit booking in the market. We believe a couple of days of a breather could not be ruled out for the market, but at the same time on the downside we believe 10,000 to 11,200 remains to be the very strong support for the Nifty. Being the previous breakout level, which was around 11,172, will act as a strong support for the Nifty. Also the gap area, which was formed in the range of 11,165 to 11,217 on July 27 will also act as a strong support. So gap area and a previous breakout area will act as a strong support, and we expect that not to break in the current downtrend. So overall, I think so market will do some bit of a consolidation in this range, where we will see the small cap and the mid cap will outperform in the current uptrend. So we believe from the current levels, I think so mid cap and small cap should catch up the exercise, and the large cap should be moving more into the consolidation range. So from current levels, I think so we believe small cap and mid cap should be the focus. At the same time, for the Nifty, we believe 11,200 will act as a strong support for, and one should look for a target on the higher side. It's around 11,400.
Okay.
Coming to Bank Nifty, we believe, I think so Bank Nifty.
Now please finish your point.
Yeah, coming to Bank Nifty, I think so we believe 27,100 will act as a strong support for the Bank Nifty. At the same time, on the higher side, we believe 28,350 is more likely the target, because in the Bank Nifty also, if you see, we have seen a sharp rally of around almost 1100 points in the Bank Nifty. So the stochastics too going into the overbought conditions. Current, I think so we believe, I think so nothing but a more of a making a consolidation, making the market more healthy, current profit booking. So any dip in Bank Nifty towards 27,100 should act as a very strong support for the Bank Nifty for a target of around 28,350 in the Bank Nifty.
Okay, before we talk about specific stocks, our special segment Bloomberg Edge, wherein Jayesh Kilani tells us about a pattern that the terminal is throwing up. Jayesh, what's the stock on your radar today?
Morning, Neeraj. It's Ujjivan Financial. That is because the stock is bouncing off from key support areas, and the analyst consensus target price is about 17 to 18% above where the current market price is. With that, what has happened yesterday is that a bullish engulfing chart pattern has been formed, indicating that there could be further upside going forward. Let's first have a look at the bullish engulfing and what are the conditions that you have to watch out for. It's essentially a 2-candle chart pattern that you have to watch out for, where a bearish candle has to be followed by a bullish candle. Now the body of the second candle, or the green one, that has to be bigger than the red one, and the longer the body of the green candle, the better it is. Once you have all of these conditions in place, there's no additional confirmation that is needed. That's called as a bullish engulfing. Now let's have a look at the chart of Ujjivan. That's the last 6-month chart of Ujjivan Financial, and the point about important support level that I was mentioning, you can see that every time in the last 3-4 months, the stock has in fact bounced from about 375 to 380, and currently also we are at that level. Why is this important level important is because have a look at in Feb as well. The stock actually made a top over there, and post that after consolidation it broke above the 380 line and went above. So that becomes a good base formation. Now the last 2 candles you have to watch out for in terms of the bearish engulfing. You see this green candle as of yesterday, this is bigger than the red one which is just preceding it. So that is called as a bullish engulfing, and the stock can likely go upwards from here.
Okay, we'll watch out for this. Jayesh, thanks for putting this into perspective. We're slightly short on time. Let's get in some stock recommendations before we get back to Vinit Bolinjkar as well. Shrikant, I'll come to you first. What are the stocks that you're recommending today?
See, Neeraj, currently the markets are over retraced, and if there is any correction, then we should look for adding those stocks which we can buy with a view of at least next 10-15 days. So it's a positional view that we have to take in this market, because a market can correct furthermore up to maybe 11,150 or 200. So based on that, we have like a design strategy accordingly. We like Tata Steel, and there are like number of reasons to buy this stock, because the stock was around 490 levels in the previous month. From there it recovered sharply and it closed at 540 on monthly basis, which was the requirement for the monthly closing. At the same time, if you see the overall pattern on monthly basis and long-term charts, then it was around 190 in the year of 2015. From there all the way it went to some 700, 715, and after that the stock has corrected to its important support area, and there is a reversal pattern. So it's a classic buy at this price. We are expecting 650 to 700 on the high side, and we can keep a stop loss close to 525 on the downside. We can again expect on immediate basis, we are expecting 600. The other stock which we like is State Bank of India, and here also the view is to buy with a position and targets of with a target of close to 320, 325. The stock has formed nice cup and handle formation, and the stock is having very good support close to 285. So other one which one we have to look for adding to our positional portfolio is State Bank of India.
Okay, so two buy calls on Tata Steel and the other on State Bank of India. Dharmesh, very quickly, your stock calls for the day?
Yeah, stock calls for the day, we believe, I think so, pharma space should outperform in the current trading sessions. As yesterday also, if you see, we have seen clearly the outperformance coming into the pharma space, as it was clearly showing the resilience. So among the pharma space, we believe Aurobindo Pharma is the one space which we like, I think so, from the current levels. A good basing formation in the range of 575, 600, and yesterday a breakout of around 605, 606. We believe Aurobindo at around 615, 616 is a buy for the intraday, keeping a stop loss of 610 and a target of 627. So Aurobindo is a buy at the current levels. At the same time, we believe one should also look at the positional trade from the current levels. We believe, I think so, the mid cap and small cap should pick up the action from the current levels. So among the mid cap space, we do like L&T Finance. If you look at the chart, I think so, the stock has registered a breakout of the falling channel, joining the highs from July 2017. So we believe this falling breakout with a good volume, supported by good volume, is clearly and giving an indication of the end of the corrective phase and the starting of the next leg of upside. At the same time, on the monthly chart, the 10-month of a fall from 185 to 140 has been retraced in just 2 months. So clearly a faster retracement of the last leg of the fall is clearly indicating the structural improvement in the overall price structure of the stock. So we believe, I think so, L&T Finance is one where we believe in the coming days should outperform. If one has a view of a 3 to 6 months in the current trading sessions, one can take a call at around 170 to 175 with a target of 210 and a stop loss of 156.
Okay, so those are a couple of trading ideas coming your way today, and we'll just be getting the pre-opening rates in a while for you. But SGX Nifty has been indicating that we could be opening higher by almost 40 to 42 points. 11,320 is where currently SGX Nifty has been trading, and we've seen some mixed start also for the Asian market indices this morning. Shanghai and Hang Seng have been under pressure, but I guess there's been some bit of recovery that has come by for both these indices. When we started the show, remember, both these indices were down between 0.5 to 0.7%. So that's a huge recovery seen in the Chinese markets right now, and Nikkei is still sitting with gains of about 30 to 32 points. And well, we'll be focusing on a lot of result reaction. Remember, among the earnings today, you'll have Berger Paints, you'll have Nestle, you'll also have Titan. So all these stocks will also be in focus as they report their Q1 earnings for FY19 this morning, and major reactions will obviously be watched out for Kotak Mahindra, ONGC, and also from Indiabulls Housing Finance. But just a few seconds to go. The pre-opening rates will come up on your screen right now. 11,271, 15 points higher. Sensex also showing a positive tick, but these rates will settle down just in a while. So let's quickly do a check for a couple of the stocks which are moving around. First up, I want to pull up Kotak Mahindra Bank. Remember, the stock's been weak in the last few sessions. Yesterday also it was down 2.5%, but in the last 5 to 6 days it's not done too much. Currently in the pre-opening session it's showing an uptick of 1%. Pull up ONGC, operationally a very good quarter, just a miss on the bottom line, but net the earnings are looking good. We'll be interacting with the management in a while. 3.5% higher in the pre-opening session for ONGC. Also inching higher in the opening session is Yes Bank. That's showing an uptick of 4 to 5%, but these rates will settle down. HDFC is also showing an uptick of 6.5%. Indiabulls Housing is reacting positively to its numbers, at least as of now, 2.5% higher for this one. Bajaj Finserv is the other one which is up in trade right now. On the losing side, among the Nifty constituents, just a handful of them, IOC, BPCL, so oil marketing companies are seeing some bit of profit booking. They've been inching higher, and your heavyweights from the likes of ICICI Bank and L&T are the ones which are showing some bit of downtick, but no major cuts actually seen for any of these stocks. The top loser right now among the Nifty pack is IOC, which is showing a downtick of nearly 1.5%, Neeraj.
Well, yeah. Interesting moves here. I want to see what Jet Airways is up to. I'm sure we kind of marked it, but just revisit Jet Airways almost every third minute in the pre-open session to try and see what's the kind of reaction that's happening there. Not too much right now, but let's wait and watch. There is weakness in Narayan Rudalaya because of the weak numbers, so interesting. Otherwise, we're not seeing some deep gashes at the Nifty 500. Nor, of course, are we seeing some really big gains that are coming into companies. So, Century Ply, I mean, you know, offbeat names are moving up and about. Reliance Naval, a tiny tune, but it's up 5% on that news as well. Interesting. There is strength in Manpasand Beverages after those numbers, so that one is up about 5% in trade. A lot of iffy names have moved up today in the morning, so do watch out. But the one name which is seems to be making a good reaction to its numbers is Capital First. That stock is up about 3% in trade. But the numbers are rock solid, and it's probably showing on the stock. Let's wait and watch if it does do this once the pre-open rates have settled down as well. For now, they seem to be doing okay. Bring up the rupee and the bond yields before we get back to our guests. The rupee will come up on your screen, 68.72, and the bond yields too will come up on your screen, 7.74. So steady as she goes, really, for the macro cues as well. Vinit Bolinjkar is still with us. So many other companies to talk about as well. Vinit, I don't know if you dropped or if you ever had Manpasand within your coverage, and after all that's happened, you've dropped it or no. But if you haven't, and if you had a chance to look at the numbers, what did you make of them?
So the day the numbers came out, I only thanked my stars that the stock had achieved its target prior to the scam unfold. You know, so most of our clients were out of the stock. But having said that, I believe that one should stay away from that counter. There's not much energy should be spent on such kind of stocks, and there should be lessons that one does deeper research than what is being done. We all make mistakes, and so that has been our learning. So we don't track that anymore.
Okay, I think it's going to be an upper circuit for this one. The other stock, Neeraj, which has come out of the ASM list is HEG. I remember you were interacting with the management yesterday. The numbers were pretty good. So I think that too will be in focus today after coming out from the ASM list. Oh, that's interesting. And Graphite India yesterday had a very interesting intraday move as well, Navneet. Went up almost 5%, then cooled off a little bit, but currently marginally up. Vinit, I'm sure you track these ones. My question really is, the common argument on the street is that the stocks have run up so much so quickly, and they are commodity stocks, and therefore there should be a lid to this. The management of HEG sounded anything but skeptical about what the prospects for the next 9 to 12 months or maybe even 18 months look like. I mean, he didn't say that the things will be definitely better, but his outlook seemed to suggest that for now on the horizon there are just no negative clouds. The way China is reacting to capacities, the way needle coke pressures are easing, things are only getting better for them, and they clocked in some amazing operating profit margins as well. Is it really pertinent to be skeptical about the moves in HEG and Graphite India, or ride the wave till it lasts?
So again, in commodity stocks, you never really know. And given the way things are moving, and capacity will slowly come on stream. Prices have also touched sky high, $20,000 to $25,000 contract stock right now. But I think that one should have a very tight stop loss in place and ride the trend, because if the trend reverses, it could be a rain industries kind of movement where the stock can lose out 50%. So the brave hearts can venture, but with very tight stop losses. And to my mind, I think the momentum trade is done a bit too much in this stock. So just for a little more gains, I wouldn't want to risk capital.
Okay, that's about Graphite and HEG. Both the stocks have been in focus. Watch out for HEG, at least in today's session, as it comes out of the additional surveillance measures by the exchanges. Vinit, also wanted your thoughts on Tata Motors. The earnings were disappointing. Now the July sales number from JLR, that's down 11%, but still majority of the analysts have a buy rating, and now they have a reasoning. They're saying that the JLR business at current price, what the Tata Motors stock has been quoting, is coming for free.
So I wouldn't want to buy a business which is showing 3 to 5% growth on 80% of your revenue. And the Indian business always clocking good growth. So, the numbers are coming at lower margins. There is cutthroat competition just to gain market share. Tatas have been cutting prices. So somewhere it has to stop. And given these couple of facts, I agree that the stock is very cheap and quoting much below, residual value. But I believe that we should give this stock a pass, and Ashok Leyland seems to be a better bet than Tata Motors at this current juncture. There will be a lot of people doing bottom fishing. Even we had looked at the numbers. We had targets of 350 on the stock. But we held back the report because the management came out, the US trade sanctions were put in place. So we were banking on US recovery taking place, with in Jaguar. Land Rover was obviously doing this. But with this, the 3 to 5% guidance is going to go for a toss, and I think it would be between 0 to 2%. And with, such huge capex outflow given 3 years of, modernization and revamping of models taking place in JLR, I think with negative cash flows, nowhere, profitability nowhere in sight, I think you should give the stock a move. We also had margin decline right now. So the pressure is there on top line, pressure is on margins, pressure is going to come from increased loan book, and the CV cycle in India has played out 3.5 years. So also the substitution, the scrapping act has been postponed to post 2020, right? So all these factors, to my mind, are creating a scenario building into a perfect storm for Tata Motors. So I would not want to venture into this kind of.
Okay, we'll see how Tata Motors reacts, at least to the July numbers which has come from JLR. But moving on, let's talk about ONGC, the company which has posted its highest net realization at least in the last 11 years on back of a surge in crude prices and decreased gas production. To discuss the quarter gone by and give us outlook on the next quarter, we're joined by Subhash Kumar, who's the CFO of the company, who joins us on the phone line from New Delhi. Hi, Mr. Kumar. Good afternoon. Good morning to you, sorry. And first up, congratulations and good set of numbers. Operationally, this time, the numbers are looking pretty good on back of the net realizations that you've posted. Could you just give us a guidance if the crude prices continue to hover around the same level? Can we expect the same realization number of 71, 72 in the subsequent quarters as well?
Yeah, first of all, good morning, and thanks for the compliments for performance of ONGC. And I do believe that if crude prices continue to hover around this level, our realization will also continue to hover around the numbers we have declared this quarter.
Mr. Kumar, what's the factors that impacted the forex losses? I mean, would you believe that if the INR were not to depreciate any further, then the forex losses that we've seen would be a one-off?
I think the large part of what we have incurred as forex losses is attributable to the devaluation of liabilities. So if rupees stabilizes at this level or improves, so then that part of it is not likely to be. This is likely to be only a one-off event and not to be repeated in other quarters.
Just a couple of hygiene numbers. This lower other income, the higher tax rate. Can you just dwell on this for a bit? How would the numbers look like for the rest of the year?
So I think as far as other income is concerned, well, specific numbers are not there with me right now, but they are likely to be at the same level as previous fiscal. As far as tax is concerned, the higher effective tax rate is attributable to the fact that the interest on the loans taken for the purpose of acquisitions are not allowable for the purpose of taxes. So consequently, the tax rate, effective tax rate has gone up a little bit.
Sir, there's some positive commentary which came by from the conference call with regard to the subsidy burden. I think the management has stated that if the prices remain at current levels, there wouldn't be any subsidy burden on upstream company like yours. But what's the range that you will be watching out where there could be a threat of some bit of subsidy burden coming on ONGC? And what's the current status also, if you could tell us?
No, we do not expect number one prices to appreciate significantly beyond the range at which they are currently, and consequently we do not expect any subsidy burden to come to ONGC.
If the prices go beyond $80 per barrel, then do you expect any sort of subsidy burden to come by? What's that range that, where there will be some bit of threat that the government could ask the upstream companies to bear some bit of burden?
No, so I can't give you a specific number, but we don't anticipate, that ONGC will be called upon to bear the subsidy.
Actually, that was going to be my question. Just one small clarity, sir. If the government wanted to act, they would have. Would you believe there is a threat of subsidy at any level of crude prices, or that's completely out of the question?
No, so I can speak for what is right now, and you have seen it, that at current levels it is not there. And we do not anticipate it to be there.
Okay. I believe what also came out of the con call was that while the crude production was slightly lower in this quarter, for FY19, the number is higher than what you did in FY18. Can you share some numbers out here, Mr. Kumar?
Yeah, I think we anticipate it to be in the same range as last year, with probably within a range of plus 1% or so. On gas, there will be significant improvement by around 6% plus, and some improvement in value-added products is also likely.
So just a last question from my end. Are you looking to monetize your stake in any other listed company?
So right now our debt is at a very comfortable level. So we have no compulsion as such, but all holdings are held for a purpose. So it can't theoretically be ruled out, but there is no compulsion to do it.
Okay, not ruling out as of now. Mr. Kumar, thanks a lot for joining us this morning and taking us through the highlights of the quarter gone by, and all the best to you for remainder of FY19.
Okay, thank you very much.
Well, in the pre-opening session, we are seeing some bit of positive ticks coming in from ONGC, but just a minute to go, so let me quickly take top trading calls from our experts. Dharmesh, looking at the pre-opening rates, what's that one stock that you would be betting on?
Yeah, today again, our intraday peak remains to be the Aurobindo Pharma. I think again I would repeat that I think so the overall pharma looks positive and it will be the dark horse in the coming days. But Aurobindo will be the pick of the day, where we believe I think so buy in the range of 615 to 616 for target of 627 and keeping a stop loss of 610.
Okay, that's Aurobindo Pharma buy call coming in on that. What about you, Shrikant?
Navneet, apart from Tata Steel and State Bank, we also like IndianOpen Bank, which closed into new territory, and Bharat Finance also closed above the breakout levels. So here we are of the view that it is heading for the levels of at least 2200 in next few days, but at least in the near term we can see the levels of 2070. So currently it is around 2025. Buy at this price, stop loss 1980, and we can expect 2070 on the high side.
Well, very interesting. So, a positional play on IndusInd Bank and an intraday play on Aurobindo Pharma. Dharmesh, thanks so much for joining in today, giving us your thoughts. Really appreciate your time. Shrikant, maybe just stay on. We'll just take in one opening thought from you post-market open. But here's how the markets are starting off. This Friday morning, we'll have a start which is marginally in the green. Actually, no, not marginally in the green, 0.5% in the green. So it's a good brisk start, kind of negating the pressures of the last couple of days. The Nifty Bank as well, not as high as the Sensex is, but still about 1/3% in the green. The mid caps and the small caps higher than 0.25%. Yes, higher than 0.25%. In fact, 0.5% for the mid caps and the small caps as well. So not a bad start, I must say. The world markets were mixed, but hey, we're doing okay. Fair bit of green, save for the oil marketing companies BP, KRC, which were up and about in trade yesterday and giving up some of the gains. We don't have any big losers. Indiabulls Housing Finance is on a roll, really. Some strong reaction to the numbers, and we'll talk about this with a final question with Vinit, maybe if he's still with us, or Deven Choksey, because he joins us as well. ONGC about 2.5% higher. Kotak Mahindra Bank about 1.5%. The pressures of the last few days being forgotten out here. Sun Pharma about 1.25%, and the big boy Reliance Industries continues to rise and shine, up another % in trade today. Good start. Titan ahead of the numbers and expectedly a weak quarter, but starts off about 1% higher. Let's wait and watch. But the star has to be Indiabulls Housing Finance, 4.5% higher. Big move here on the NBFC name. Just a couple of pockets that I want to highlight, more from the mid-cap space before I hand it over to Navneet. Jet Airways and Warning Bells, Mint, Economic Times, both have some reports which don't quite inspire confidence. The stock is down about 3.5% in trade today. Well, let's wait and watch what happens going ahead. So this is one. Two, they're going to mull a buyback likely on August 7th, and that stock is up about 3.5% in trade is emphasis. Last but not the least, the impact of the Capital First numbers, good set of numbers on all the three. So Capital First is up about 4%, IDFC up about 1%, IDFC Bank about 3% in trade. Not a bad start to this trio. Navneet, what are you spotting?
Star on my screen currently is PBR, and it's Friday to Neeraj. So 7% higher, but that's in back of news that the company's renewed its non-exclusive agreements with Paytm and Book My Show. So that's seeing some buying momentum coming in the opening session. The other stocks which are going up in trade are the likes of Emphasis, which is up nearly 4% right now. Inox Leisure also, by the way, is up nearly 3% in trade. And Neeraj already highlighted stocks like Indiabulls Housing, which is up, and Capital First. Both these stocks, remember, are reacting to their numbers. From the logistics pack, you've got Snowman Logistics, VRL Logistics. So once again, the entire pack seems to be doing well. If you could just also pull up other logistic counters like Gati and see what that one is up to. Gati is also up 1% in trade as we speak right now. 8K Miles is the other one, which is up 5%. Pull up HEG, that one comes out of the ASM list by the exchanges. So that's not too much of gain, but still up almost 1%. On the losing side, Jet is obviously down 4%. JK Lakshmi Cement is seeing cuts of 3% right now. Something like JBF Industries, Marico is down another 1%. Remember, the earnings came out yesterday, and what brokerages are saying, the second half of FY19 probably could be better, because that's when the input cost pressures will start to ebb. So watch out for that one. Moil, the revenues for the quarter were down nearly 7 to 8%. Profits were up 16%. Not too much of a reaction. Deepak Nitrite also came out with the numbers where margins slightly dipped for the first quarter. That's reacted negatively. 2% lower for Deepak Nitrite. And also Shakti Pumps, pull up that one. The numbers were pretty much okay, but margins were down. So that's down almost 3%. And also Narayana Rudalya, that the revenues there were up almost 25% in trade, 25% for the first quarter. Sharp reaction actually seen for this one, down 4% in trade. The reason for that is the margins came down sharply. Just want to highlight stocks like Venky's, Borosil and Tint Plate. They were up in yesterday's session. Reason being because they came out of the ASM list. Venky's, after being locked in upper circuit, up another 11%. Borosil up another 6% in the morning session. And Tint Plate is the other one, just about flat opening there, Neeraj.
Interesting. You know, we'll get to Deven Choksey in just moments from now. Vinit Bolinjkar, before we thank you, Indiabulls Housing Finance, can't take eyes off that one. Scorching the screens today. What did you make of the numbers? What's the outlook on the stock?
We are very positive. You know, it's the best stock in the housing finance space, as I spoke earlier to you. It's got very, very competitive cost to income ratios, good growth, with one of the best margins and the best ROE factors. So given the boom in the housing space, this stock at, you know, just a shade about 2.9 times book looks very, very mouth-watering, and we expect this to be a very long-term story. So we are quite enthused that we have a buy on the stock.
On this one, well, good having you, Vinit. We could have discussed SAIL maybe on a slightly lighter day, but we'll save it for another day. We'll watch out for the numbers and talk to you once again, maybe next week or the week after that. But thanks for joining in today. Shrikant, very quickly, Indiabulls Housing Finance.
Neeraj, see, like this one is showing a lot of strength because it was around 1100 a few weeks back, 3 weeks back, and from there all the way now it is at 1400 levels, which is its all-time highest levels. So based on its overall formation, I am of the view that the stock has corrected on long-term charts, and now again it is reversing back. So it's a very positive signal that the stock is signaling, and we are expecting now the stock is heading for at least minimum 1450 in the near term in next maybe 1 or 2 weeks, and in the long run we may even see the levels of close to 1800, 1900. So it's a very strong bet to buy. Of course, 1440 was the previous highest level, so we have to respect to that. But the way the formation is there and the way the speed is there in the stock, I'm very much sure that it is going to cross this level.
Okay, Shrikant, leave it at that. Thank you so much for taking the time out and being with us today. Really appreciate your time. Watch out for, yes, Indiabulls Housing Finance as well, and watch out for the positional call that Shrikant Chouhan gave. Shrikant, what is the positional call? The top pick? IndiaSind Bank.
IndiaSind Bank.
IndiaSind Bank. Okay. I just missed that. Okay, cool. So watch out for IndiaSind Bank as well. Thanks. Shrikant seems to be betting big on financials. Let's get in Deven Choksey and try and figure out what is he betting on. Clutch of numbers, clutch of news flows. So much to talk about. Deven, thank you so much for joining in. Sorry to keep you waiting. Had to go across to the ONGC management. But maybe you got a chance to hear what the management had to say. Maybe you got a chance to read up what the company did as well. Does it Deven inspire any kind of confidence from an investment perspective? Because somehow, despite the vagaries of crude notwithstanding, the company doesn't quite give financials or the stock performance which makes you feel that let's go out and put big money to work here.
Absolutely. I think good morning, Neeraj. Well, I think this is the problem with the commodity business on one side. The management would never get the confidence or the clarity to tell investors exactly, I think, what they are expecting. The volatility into the crude oil prices is something which is keeping us, all of us, away. The realization in one particular quarter which has gone up, I think, is largely because of the factors which we know. Whether it will sustain in subsequent quarters, I am not too sure. Neither the management is committing themselves. So in a given situation like this, I think how do you commit serious money to a business which is completely driven by the commodity volatility? And that's the reason for which I think the buyers are not found in this particular counter. And I think the pure play upstream business or pure play downstream business, particularly with the PSU, will not make any kind of a significant difference. You need to have an integrated play wherein I think you have the upstream, you have the downstream, and you have the margin to talk about from the refining and the distribution thereafter. So if you have the complete play, then probably I think it makes sense. Otherwise, I think this does not make too much sense to me, at least at this point of time.
Okay, ONGC has already given up its opening gap-up gains that we had to see, 167 right now. The stock's just about trading with gains of 0.5%. I want to revisit the logistics pack. All the stocks have been inching higher, right from Sikil Logistics, All Cargo, Patel Integrated, Snowman, VRL, you name any of them. And this morning has been a good start for all of them. Sikil is up almost 9% at trade. Snowman Logistics up almost 4.5%. Deven, I'm not too sure if you're tracking this space. And it came into focus after there was this news report suggesting that TVS Logistics is looking to buy the promoter's stake in Gati, and I think the management did inform the exchanges that they are in talks, for such kind of deal. Any thoughts on this space? Because this was one space where most of the market participants were bullish before GST implementation.
Yes, I think so. Gati has always been in talk, I think, for sell-out of their stake. So I think not very surprising if TVS is confirming that part of it. The overall viewpoint, I think, that we carry as far as the industry is concerned, higher amount of movements of the goods because of the implementation of GST, and now with the e-way bill coming in, I think the certainty on the offtake of the goods and delivering it to the manufacturing space, I think, is what is driving the entire logistic business. Most of the companies are working on just-in-time inventory now, and that is where I think the single tax system across the border, seamlessly transportation of goods after the GST bill, I think, is possible, and that's where the logistic companies are seeing larger volumes also coming in. And given this kind of a situation, according to me, I think there is a space, or maybe there is a cause for consolidation within the logistics service providers. Unless you consolidate and create a scale which is a pan-India scale, I don't think that you will create larger amount of what you call business sense for yourself for making higher profits. So I'm not surprised. Maybe I think we will see the larger players emerging much stronger. TVS has already indicated. Mahindra Logistics, I think, is one big player, I think, which is also in the space. Not too sure, I think, what Blue Dart wants to do in this kind of an environment. But the fact remains that I think you have a very large play at this point of time, and consolidation is on cards, as one can easily count on. And that is the reason for which many of the logistic companies' shares prices are going up. We don't have any coverage per se at this point of time, so would refrain from putting names across at this point of time.
Deven, if there's one standout feature of this earnings season is that NBFCs by and large have performed. Indiabulls Housing Finance is just a case in point, and HFCs are probably the weakest of the link, but the others have put up their hand and given a good performance. I know the street might be slightly skeptical of the elevated price to book levels. What about you? Are you skeptical here, or if you have put money to work in NBFCs, you are convinced that it's a good idea to let it ride?
So I think it's a good point. I think we keep debating this subject. What I sense is that I think if the NBFC business is seeing the sustainability in the credit growth, then I think it is making sense. The second point is that how soon you recover your money back from your borrowers. If you have the typically lower credit cycle which you have in the consumer credit segment, I think then in that case I think it makes even more sense to see the higher growth and better numbers. Third most important aspect is that the NBFCs which are digitally connected themselves with the customer, they are basically making more sense, because on one side their cost of lending is definitely on a lower end. At the same time, I think they enjoy the predictability of buying power of the customer, and through which I think they bargain the price discount from the manufacturers. We call it subvention pricing. I think those companies, particularly having this characteristic in them, they assure you of, I think, sustainable volumes. Even when we were looking at Bajaj Finance, and I think they created a separate subsidiary for the housing finance, we found that I think the management's thinking is completely different in housing finance business. They probably create the customer segment, and thereafter I think they get the bargain from the developers. In turn, I think they make higher margin. So if you have this typical characteristic established with a higher margin coming in, the NIM itself I think upwards of 10%. If that comes in, then probably I think you have reasonably good surety of paying the premium to a company. You don't have too many, of course, I think in the space. I think Bajaj is expensive, and any correction in the price would make meaningful sense to look at the company once again afresh. But business model remained quite robust, so you definitely will have to pay the premium to that.
That's right, Deven. All the good stocks which have been performing well so far this year, they've been quite expensive in terms of valuation, and one has to pay the premium. And when you talk about, higher valuations, we can't get away with FMCG pack. So far, Deven, the numbers have been good. The volume growth suggests that there is recovery that is kicked in the rural market this time around. Look at Dabur or be it Emami, HUL. The numbers looked quite good. I think besides Marico, which came out with the numbers yesterday, the volume growth was not bad. Actually, it was just in line with what the street was estimating. But overall, if you were to pick up one stock, Deven, now at these levels in the FMCG pack, where do you see the best risk reward?
I wish Patanjali was listed. I think if I had to answer this question, where is the yeah, so I don't know. I think the other FMCG companies, they are growing at a good rate of growth. I think HUL has been growing at a good rate of growth, ITC growing at a good rate of growth, Britannia, Nestle's, they're growing at a decent rate of growth, and we like these companies. But as you rightly said, I think they are expensively priced, and they were never cheap though, but I think they are expensively priced. So the way in which we look at this company is that if you must buy or if you must hold this company in the portfolio, your future earning outlook should be clear for next 3 years. Maybe I think in first 2 years you will find them expensively priced, but third year onwards, I think with the growth that is being seen, I would think that they will justify the higher valuation. And that is where we say that I think the companies in the FMCG space are not cheap for first 3 years. Unless you hold it beyond 3 years, I think they are not going to make any meaningful difference in your portfolio going forward. So that is the rationale that we put across for buying expensive stocks. We like Britannia. We particularly find, I think, this company giving larger amount of clarity for growth. They are entering into all the 4 food segments in a day for the consumers, and that's where I think we find that this company could make a difference. They are not cheap, but at the same time they are offering a good visibility going forward with the kind of program that they want to launch. So in my viewpoint, we'll have to be selectively buying into quality names. As of now, ITC may offer relatively more downside safety because of the price which is not moved up as much as I think the other stocks have. So from that point of view, if you are protecting yourself for downside, then ITC may be good. Otherwise, from the growth perspective, if you find HUL and Britannia, both of them are appealing what you call proposition.
Okay, Deven, Patanjali may not be listed, but there was that thread that, you know, it was giving some stiff competition to these other FMCG players. But I think the numbers right now show that they have, you know, lived up to the sort of competition Patanjali was throwing up, and volume growth definitely. I think that's been auguring well because of the recovery that one's seen in the rural market. Deven, Choksey, thanks a lot for joining us this Friday morning. Okay. Markets are inching higher. Nifty is above the mark of 11,300, 68 points higher. Bank Nifty also above 27,500 right now. So it's been a good start. On that note, we'll take a quick break, but don't go anywhere. On the other side, how is Century Ply withstanding the heat of price cuts from peers? We asked the managing director of the company, Sanjay Agarwal, and also decode June quarter earnings with Vaidyanathan of Capital First and Abhishek Jain of PPAP Automotive. Stay tuned to Bloomberg Wind.
RP Sanjeev Goenka Group, growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with Indian Open right here on Bloomberg Quint. Century Plyboards is betting on GST and a general shift to the formal economy, as are the other plywood companies. This company is projected at 25% growth in the top line. What could play spoilsport is pricing pressure as new players enter the market. Joining us now to talk about this is Sanjay Agarwal. He's the MD and CEO at Century Plyboard. Joins us right now on the show. Mr. Agarwal, good having you. Thanks so much for joining in. Now, good morning. There's a brokerage note which mentions that Action Group has initiated some price cuts as a result of which almost all key MDF players are also feeling the heat. Can you tell us what's happened in the last couple of months, and Is there some pressure on the pricing front as a result of this action?
Yeah. You see, we came into production sometime in October last year, and in spite of a heavy capacity coming into a small market, still there were no price cuts till March. From April, yes, there has been some price cuts because the markets are not behaving so well, and a new capacity from Exxon has further come into the system. So it's not the Exxon who cut the price, it's the Green who actually initiated the price cut. Yes, there is a pressure of price in the market. We have reduced, everybody I think has reduced after that 3 to 5% prices since April until now. But I think that the sales have been still good, except the last month because of all these truck strikes and all that, there has been a problem. But we already see this month, after the truck strike, the lifting is very good. The demand, the orders we are getting are excellent. So I don't think that there is a big issue, but yes, we expect price cut in the south of India because another plant from Green is going to come into production or has actually come into production, and trials are over, and I think they are coming into commercial production also very soon. So we expect some price cut in the south of India. So that's okay, that is already expected because south of India mostly imports its material from other countries, and I expect that they will have to reduce prices in South India so that they can stop the imports or reduce the imports. And because they will reduce the imports, the consumption from us, all of us, will really increase in this country. So that is a good for the industry in times to come. So I don't see any major issues. Yes, the prices will have to go down, and I don't see any relief. At least the capacity which has been created should take about a year or maybe 15 months, 16 months to really consume, and we reach a time by next year end when we again see that the capacity consumed will be probably totally consumed in the market, and then we will see again some price rise. Because we don't have any other plant coming up immediately. There have been discussions with the...
Mr. Agarwal, by we you mean the industry, or by we you mean Century Plyboards? And the reason I'm asking this question again is that the note that I was referring to speaks about maybe not the rest of the country, but North India seeing some substantial excessive capacity, MDF supply at least, for the next 3 years.
Not 3 years actually. You see, the total capacity increase is basically mainly everything else has been consumed. It's about the 1,000 cubic meter plant which Green is coming up in South India, which will not supply to rest of the country, but which will supply mostly in the south of India. So we expect a lot of, this MDF ultimately cannot be supplied into from one part of the country to another part of the country. Right now we can afford that transportation cost because there is not much of manufacturing and we are actually realizing good prices. But in times to come, Northern India will become Northern India, Western India will become Western India, and we will have plants across the country. Okay. So yes, presently there is an excess of capacity, which I expect by end of 2019 or beginning of 2020. I expect, because the growth in the industry is also about 20% as far as MDF is concerned. So I don't think there is a big issue. Yes, for next 1 year there is a pricing challenge, which we are ready to meet, and we are meeting. Otherwise, you see today, even till the month of July, we have sold more than 10,000 cubic meter. We just came into production. This month again, in the month of August, we expect more than 10,000, 11,000 cubic meters from my factory, or maybe 12,000 also. So yes, last month because of the trucker strike, there was a problem. We could not dispatch. We had so much of order. I have got more than about 150 trucks pending in my factory, but I could not dispatch.
Oops. Okay. Hopefully that won't be something that will get repeated, Mr. Agarwal. But just one small question though. So you differ from the belief that maybe certain players on the analyst community have, that North India will have additional capacity. You just referring to that one plant from Green in South India. You do not believe North India will have excess capacity of MDF?
No, in North India also, because of the Exxon's latest plant, there is some excess capacity.
But it's not to the tune of 30-40%.
It's about, say, 600 is our 800. It's about 25-30%, yes. But then that really you have to understand that 20% consumption is also increasing.
Okay.
Otherwise, my sales will absolutely go down. I will be in trouble. But I am not in trouble at all.
Okay, I get your point. Now let's talk about you as a company too. if I look at the last 4 or 5 quarters, Mr. Agarwal, sales have been circa this 500 odd number. I mean, maybe Q1 FY18, they were about 440 crores. Then you nudged that 510 crore mark. You're currently stable at about 530, 540 for the last couple of quarters. But you have a new capacity that has come on stream. Over the next 6 to 9 to 12 odd months, would the base run rate for Century Ply as a company move higher from where it is right now on a quarterly basis?
You are talking of MDF only?
MDF or otherwise. I mean, the overall revenues for you as a company, all put together.
You see, as far as MDF is concerned, we are very clear that we are presently utilizing about 65-66% of the capacity. We will certainly cross 75%. We are, of course, trying our best for 80%, but yes, 75%, 76% we are very sure we will be able to surpass. As far as plywood is concerned, the Q1 figures, if you have seen, are actually very, very good. And even in plywood, we have an excellent growth, which was not there in last maybe 2-3 years. So the first Q1 is showing a very good trend. In spite of the truckers strike in the month of July, we have a good growth. So, and the laminate division also, you see there is a good growth. We have grown, I think, 16 or 17% as far as the volumes are concerned. There is a problem with the profitability of the decorative division a little bit. That is because the petroleum prices have gone up and we have passed on the costs very recently. So those results we will see in Q2 and Q3. But otherwise, as far as the growth is concerned, this year Century Plywood will be growing more than 24-23% overall, including everything, because the most will come from MDF, of course, because last year MDF turnover was maybe 140-150 crore, and this year we are expecting about 320-340 crores at least. So the most growth will come from MDF, but otherwise overall this particle board division is also growing very well. We were unable to actually sell the total production we have, but now for last about 3 months we are selling more than what we can produce. So we have practically cleared all our backlog stock in our factory and we see a good future now.
Okay, that's interesting. Mr. Agarwal, one question then as to what happens to realizations and margins. You mentioned that there have been price cuts that have been taken because of action, if I can use that term, and the excess capacity that has come in from green as well. Does this impact blended margins by and large for you as a company for the rest of the year?
Yes. As far as MDF margins are concerned, the EBITDA is down and I don't expect MDF EBITDA to really go up. But EBITDA in plywood division has gone up from 13.5% to about 16% in Q1. So I expect some compensation from plywood and MDF, plywood and laminate division, but MDF margins cannot go up because for next about a year I see there will not be any price increase. There may be some price cut as far as South India is concerned. So that will actually put a pressure on us from North India, who probably will have to reduce dispatches to South India and consume more into Northern India only. And once we try to consume more into Northern India, again 2-3% price cut in even North India may come. So yes, there will be little price pressure, profitability pressure, but plywoods and laminates should be able to cover up.
That is for FY19. My last question really is about what the industry or the street expected plywood companies or plywood stroke MDF stroke laminate companies to do post the advent of GST and the move from unorganized to organized, which is clock sustained 20-25% growth for 4, 5, 6 years. Would FY19 be the start of such a trend? You've guided to about 25% for FY19. Do you believe the industry has the strength to reenact that growth for the next 3 or 4 years as well?
See, we have been talking this for last now about, because the street is always, advance. It always talks maybe a year or two in advance from we industry people do. So we have been talking this for years. So now is the time to really show it actually on the papers and actually in the markets. So what I see in this company today, that everything else, or even in the markets for every company in plywood who are into branded segment, I already see a shift. But India being India, you see, right now they have just started the e-way bill. But still people, the unbranded segment or the informal segment is still trying to bill without bills or maybe at a very low value billings and all that are going on. And the government is actually already trying to now plug those loopholes through the data. You must be reading in newspapers and everywhere and even in your channel that they are trying to plug the loopholes. So what I believe that it will take another year before we really get a big push. But that has to come. Nobody can stop because the difference between us and them used to be 50%. Only because of taxation, which will now probably, even if they do some adjustment, the difference will come down to 10% or 8% or 5% because of taxation. The quality difference can be another 10%. If we sell within 15% or 20% of their prices, nobody can stop absolute growth. And you also have to look at the total market is maybe 20,000 or 22,000 crores. Out of that, Century Plywood sells plywood of maybe 1,200 crores. What is the percentage? 6%.
True.
So gaining a 2% market share will be very, very easy for us. And a 2% or a 1.5% is 25% growth.
Well, it's been a pleasure chatting with you today, Mr. Agarwal. I'm glad we spoke today and look forward to talking to you post your quarterly numbers every quarter as well. Thanks so much for taking the time out and such a candid chat, really.
Thank you. Thank you.
That's Century Ply and a very candid chat from the management. Stock up about 1.5%, believes can digest the pressures because of the MDS price cuts. What about Capital First? Well, which didn't face any pressure. This was a strong quarter. Asset quality saw an improvement as well. Shraddha Babla spoke to Vaidyanathan, Chairman and Managing Director at Capital First, and began by asking him about the business mix of the company.
Yes, it has been a stated strategy for 8 years at a stretch now that we are largely and only going to concentrate on building the retail and the consumption and the SME financing book. So now that is almost touched 90% of the book. So corporate is relatively marginal in the scheme of things at this point of time.
All right. We have had some bankers who have raised concerns on their SME portfolio asset quality, while the others like Bajaj Finance don't see any red flags. What has been your experience with the SME and LAP book?
Well, now it's been 8 years at a stretch. The truth is that we have had absolutely no year and certainly not even a single quarter which has really bothered us significantly. It's been quite stable. Of course, with the kind of growth that we're seeing in India in consumption and in SME, we should of course be careful. We should no doubt we have to be careful on this front.
Okay, so you haven't seen any incrementally large write-offs as far as that book is concerned?
Not at all. In fact, if you see our results, the charge-offs this quarter is actually sequentially lesser than even the previous quarter, almost in the same zone. We are actually seeing the credit performance actually increasing, improving. So we think really we are not seeing any stress on the book. Let me say the biggest period of stress test was the demonetization or the GST implementation. They all went by quite comfortably. So we are actually not seeing any problem here.
So your total income for the quarter has grown by about 31%, but your OPEX has gone up by about 47%. Just trying to understand if this is the trend that we're likely to see going ahead. I'm just looking for some sort of a guidance with respect to the cost to income ratio.
As I mentioned to you, we are expecting the net interest margins to slightly come down. In fact, we've already seen it come down over the last quarter. We are actually seeing that our operating expenditure has come down and credit losses have come down. So in the end, without guiding for cost income ratio, which will probably be about 52-53%, we expect that the return on assets to continuously increase. We expect return on equity to continuously increase. If you see the return on equity for the last 25 quarters at a stretch, it has inched up from about 2% to 16%. We believe that net of costs, we believe this trend should continue.
Right. And so what about the timeline for the IDFC Bank merger to get completed, and by when do you expect all the approvals to come in place?
We think by December almost everything should be in place because all the significant approvals are behind. One significant approval that is in front of us and not yet received the shareholder approval. September 3 is the shareholder vote for IDFC Bank shareholders. Sometime later in the same month will probably be the shareholder approval process for Capital First shareholders, and therefore September I should say is a crucial month.
All right, and Capital First has picked up 7% stake in Village Financial Services for 15 crores. You also have a small stake that you picked up in Satin Credit Care last year. So are we continuing to look at similar tie-ups or small acquisitions, if I can call them, even in the future?
No, I can't talk about the future. These are very opportunistic and transactional cases.
All right, but you do intend to pursue the strategy of getting more and more tie-ups to expand the distribution base?
I mean, we are in the business of lending, so we always look for opportunities for tying up with people. But these are specific and opportunistic. There really can't be any prediction about how many more deals will happen and stuff like that.
Well, that's Shraddha Babla in conversation with Vaidyanathan. The stock has done reasonably okay for itself. Now, of course, Capital First is a story of what the combined entity of Capital First and IDFC Bank could do going ahead as well. 554 currently, just about 2% higher in trade. Okay, now let's get in one more management, PPAP Automotive. Mid-sized company, but the numbers looked reasonably okay. 21% uptick in sales, margins inched up about 80 basis points, profit up about 50% in trade at 8.85 crores versus 5.93 crores. Let's get in the management. This Abhishek Jain, who is the CEO and MD at PPAP Automotive, joins us on the phone line from Delhi to talk about the numbers. Good morning, Abhishek. Thanks so much for joining in. Put the quarter into perspective. What led to this margin expansion, and would you be able to continue what you've done in quarter one for the rest of the quarters as well?
Thank you, Neeraj, for having us on the show.
Pleasure.
So in this quarter, we've seen a revenue growth of 21% coming about, and our EBITDA margin is 19.94%, which is what we had achieved in the past quarters as well. So we are able to maintain these margins. And the margins are basically protected because we have a very strong focus on improving efficiencies across the organization.
Interesting. So as volumes improve and with the efficiencies that you're talking about, do you believe that you could nudge above the 20% mark on the EBITDA margin front and stay there consistently, Abhishek? Is that a possibility?
Last year, we had achieved an EBITDA of 21.35%. So we are very comfortable in this range of EBITDA, somewhere between 19 to 21%.
Okay, and that, despite the fact that the material cost is down on a quarter-on-quarter basis, etc., you would believe that this would be the range. Also, part two of my question would be that despite commodity costs being higher, how is it that your material cost is down on a quarter-on-quarter basis?
Well, material cost, it's a factor of cost and efficiencies both. So we firmly believe that wherever costs are increasing and which are beyond our control, so we must balance the situation by improving efficiency on the operations. So that is the prime reason where our material cost is more or less stable if you look at our balance sheet for the last 3 or 4 quarters.
Okay. Abhishek, the numbers looked good. What's the current utilization rate? Are you already at peak capacity utilization? And therefore, if that is the case, what do you do in order to improve the outlook or the sales rather?
Currently, we're operating at about 75% capacity utilization. And last year, we've established new facilities in Chennai and Gujarat. So those facilities are online to come into the stream this year. So we are very comfortable and we have enough capacities to support the growth that is anticipated.
And conversations with OEMs are strong to ensure that all of these capacities start operating at the optimum capacity utilization from the word go. And if that is indeed the case, does FY19 as a year look increasingly impressive on the top line front? Because you have space to increase capacity utilization in your current capacities. You have new capacities coming on stream, which I believe will also add to top line. Give us some color about what the year could look like.
See, the automotive industry is expected to grow by about 8% this year. And historically, we've been growing at a rate higher than the industry. So even this quarter has been a good quarter where we've been able to grow almost 20%. So we expect a similar trend to continue for the entire year as well.
By similar, you mean what, 20% growth?
A growth which is higher than the industry growth, I would say.
You clocked in 20% for the quarter. Is that
yes,
the one that is higher than industry average, and therefore do you believe that is something that you could do?
It's quite achievable, I would say.
And you would stick to that guidance despite the fact that you have larger capacities coming on stream as well?
Yeah, actually, whatever capacities we have are all tied up with the customers' requirements.
So then why are you sticking to 20%? I mean, if you've done 20% growth with 75% capacity utilization with the existing capacities, if the newer capacities come on stream, wouldn't that lead to a larger top-line performance, Abhishek?
See, we're not in the commodity industry where, you know, if you have a 75% capacity utilization, you take it up to 85, so that would yield extra sales. We are an OEM supplier.
Yeah.
So our capacities are all tied up with what the customer wants from us.
Completely agree.
We have to keep some spare capacity to adjust for, you know, inherent some extra demand which is there from the customer. So
okay.
So it's not a very simple correlation between 75% and 20% growth.
Okay.
So there are a lot of factors behind this additional growth which will come.
Okay. Abhishek, we wish you all the best for that and more. Thank you so much for taking the time out and being with us today, and all the best for the year ahead.
Thank you. My pleasure. Thank you.
That's PPAP Automotive. Conservatively optimistic, I would probably say, for the year ahead. Just before we wrap up, want to mark Indiabulls Housing Finance up about 6% in trade. It stayed rock solid for the first 45 minutes of trade, or first 40 minutes of trade. Let's see what the day has in store. Volumes too much higher than what the typical average volumes are at this hour for Indiabulls Housing Finance. GAIL has some strength to itself, and Pharma for a second day in a trot is showing some strength. Dr. Reddy's 2273. You know, it's interesting what Pharma is doing really. On bad news, the stocks have stopped reacting too dramatically, and they've inched up after that. Dr. Reddy's had a spate of news which took the stock down to 2,000, didn't react too much to its results, currently at 2275. So, well, there's something on out there, and something on the index as well, because 0.7% higher for the Nifty, and only 2 stocks or 3 stocks in the red, which too by a very small margin. The top loser is Tech Mahindra, which is down less than 1%. Tells you about the strength that exists in the markets today. The broader market's too active. I'm sure the FNO show will take forward all of that action. So wrap it up on this leg of Indian Open. Thanks so much for watching. Stay tuned to Bloomberg Wind Live.